So markets closed. Let's have a little quick recap. They were up today, not by too much. It's kind of a bit of a choppy session, just sideways. The whole week was sideways-ish. I still think we've topped, but today it wasn't as bearish as I was hoping. It I mean the markets were up, yields were up too. The dollar was up. There was some assets not correlating the way you'd normally expect them to correlate with other assets. So I think we're gonna have to wait till next. Well, obviously now for it's the close, but next week I think we're gonna get some movement, some direction, a bit more volume. There are some stocks I want to review in particular that I think might move the market, namely Tesla. I think Tesla might move the Nasdaq down next week. We'll look at that later. Let's just have a quick recap. So the SPY was up. Forget these red candles. I mean, it's just the way it's colored here on TradingView, but it's just suggested it closed lower than it opened, but it was still a green day because it was the close was higher than yesterday's close. So it was, the SPY is up 0.5%. I was looking for a move down here, not necessarily today, but that's sort of the next move. But considering tomorrow or Monday, uh, you know, we'll have a candle here. It's looking for a big move down from where it is, so I'm not sure if we're going to be able to do it on Monday. And if it's Tuesday, it's going to have to move up here. But we'd have to get too cute with that. I still think we're going to go lower. I think we're going to test this ascending support, break it, go down to the next level, which actually will be roughly there. But anyway, we don't need to draw that right now. So markets were up. Let's just look at the Nasdaq. They all had similar chart patterns, and actually their percentage moves were equal, to be honest, except the Nasdaq that was unchanged, which means it closed the same price as yesterday's close. Now, although it was a green day, the markets did close lower than they opened. So they opened nice and high, and they basically just went lower the whole day. They bounced off their low, but they closed lower. So, imagine the market opens and just the whole day goes down. So it wasn't exactly the most bullish day either. Nasdaq closing where it closed yesterday. So basically it's kind of an irrelevant day. The Dow Jones, this could just be a coincidence, but it moved up, unlike the SPY and the Nasdaq, the opener went lower. The Dow Jones again showing a bit of strength. Opener went higher. It also touched this ascending support. Now it's not as obvious on the 1 minute. So sorry, on the daily chart, but if you were to sort of draw this pattern, it looks a little bit more. You can see it's sort of respecting this trend line as resistance rather than support since we broke it. That could be a bit of a coincidence. I might be too zoomed in. And it doesn't matter too much in the grand scheme of things, but I'm still hoping for a rollover next week. Again, the Dow Jones is very strong. It's going to take a lot to see that crumble all the way back down to its lows, but baby steps. Russell 2000, just like the other two, the SPY and the Nasdaq, basically, I mean, it did venture a little higher after the open, but closed lower than it opened, but otherwise up about 0.5%. So nothing too much to read into today. It's all still within the same trading range. The VIX was red, going down towards its lows. VIX has been a bit broken to me, so I'm not going to read too much into that. Let's look at yields. Yields, that's a little interesting. So the shorter end of the yield curve is getting quite strong. You can see the 1 year is basically pretty close to testing its all-time highs, local highs. So, next day, Monday, we could be all the way up here at the 4.8s, mid 4.8s, and basically testing and maybe even breaching probably on Tuesday the old highs. That's very significant. Remember, yields are the most important thing out there. They're the things that really break markets. So that's the 1 year. The 2 year is the most important, along with the 10. The 10 is the most important, but the 2 years is the one people don't tend to look at. That, a bit like the 1 year, is moving back up pretty quickly. This is something I did expect. I don't know, 1, 2, 3 days away from testing its high. This high is maybe not something to look into too much, but about the 4.75 range, that could be done in 1 or 2 days. So this old Support might act like resistance, but with yields, I don't see it acting as too much of a strong resistance. But the support here identified here held. So flushes ascending support held and straight away back up. The 1 year didn't even get there. That's how strong the shorter end of the yield curve is. The 5 year, I mean, it broke it straight away and took out this low. So that straight away just nullified that area as being support. And this was identified as support that held going back up. Also, it will take a bit more time than the 2 and the 1 year. The 10 year didn't get back down to this area. It hasn't moved up too much compared to the others, but it's on its way. It takes maybe 1 week. We can go back and test the sort of, I wouldn't expect it to go and test the top straight away. You would find maybe a bit of resistance, let's say around here, 4.09. I don't think 4% would be resistance actually for the 10 year. I think it would go right through that like butter. But then around this area here, around 4.1, bit of resistance, then sideways, then break out, then come back down from testing the highs, then break out again. I still think yields will go up, basically. 30 year, the weakest at the moment, as expected. We've got total inversion, and therefore the shorter end is much stronger than the longer end. But still, we bounced. We're bouncing. It's only 2 days, but still a bit of a bounce. Maybe come back and test this sort of range here, right? That's previous support becomes resistance. So maybe you could call that 4% resistance, just a bit above. So yields are going back up. I'm not going to look at the European yields too much, but I'd expect something similar. Maybe not as much actually, but still more green than red the last 2 days overall. Let's look at the dollar. The dollar, this was actually pretty nice. So I don't know why this is whatever. I did identify 105 as support. I know a lot of people are looking for a move down. It's possible, but obviously everything's possible. But I did actually think 105 would bounce and come back up. I think it will come back up, test 119, 110-ish. Then let's see what happens. Let's see what the news and the trend of the week is. But I still think that regardless of news, the chart will prove that bounces happen, whether if something's going up too much, it will retrace lower. If something's gone down a bit too much, you'll have a short-term bounce. And that's what I think this is at least. So I think the dollar will move up next week, along with yields and markets rolling over. Yeah, so nice strength in the dollar. I like this call here at 105. I'm not going to look at the individual currencies. Let's look at commodities. Let's actually look at gold and silver. I'll do a more in-depth market review tomorrow during the weekend. So just gold and silver for commodities. What I wanted was to see a move lower. Also in the gold and silver space, everyone was just calling for the all-time, not the all-time high, but this is it. This is the breakout. Don't bother getting too cute and trading it. But you have to identify support and resistance, and that's what I think I did quite well here. So gold and silver looking for a move lower. It was quite weak relative to other asset classes, but it wasn't as weak as I thought it might be, gold and silver today. So I'm a little concerned that it doesn't come down too much and that I missed the buying the dip part. So, but I'm going to be disciplined. I'm not going to get too trigger happy, and let's wait till next week. If what I think happens next week, which is to say the dollar moves up, yields move up, and the markets move lower, then we would most definitely see gold come down to 1720, maybe even lower. I don't think so, not next week. I think it'll be too much of an ask to get gold to make a sort of 4% move down. So maybe 1720, maybe a bounce just above 1700. But settling around 1720 next week. That's what I expect to happen. Silver has come down a bit more than gold. It is at a support zone, at least one that I think exists. Gold is not there yet. I think the support zone for gold is 1720. So if gold does move down to 1720, you could get silver at 20, basically. So in fact, let me just move this down here. From 21, which is where we are, to 20. Nice and simple. It's also a bit of a level. You can see it's a middle level within this sort of fork channel. It would be the sort of the line going in the middle between these two parallel lines. So that would be the fork, but it's a nice psychological number, 20, but it's also sort of resistance there. So anyway, if we do come lower, if gold goes down to 1720-ish or even 17, I think we'll have silver here, and silver will get very strong around here. Remember, it's got a lot of strength here, a, a lot of strength, and it's also relatively stronger than gold. I mean, look, even today it wasn't down as much as gold. In fact, it was up for quite a bit, I believe. You can see this wick here was up like 1.5, almost 2%. It just came down because gold did. So maybe it's already relatively stronger than gold all the way up here. So yeah, if gold does come down, it's gonna kind of force silver down a bit like today. And I think gold at 1720 makes sense with the dollar and yields going up and the market going down. And I think that would equate to silver hitting 20. Let's see if we can go lower. Let's at least get to the first level first. So that's gold and silver. Let's look at the miners that were green today. Miners are outperforming the metal, which is good if you're bullish. I'm bullish. I hold a lot of positions in the miners, but I did trim my position nicely first into this move here, and then a bit more strength here. And I'm looking for a move down here, which I didn't get. All we've got was the gap fill. I'm looking for here and preferably all the way down here. So I'm not actually happy to see the minus up. If it does go all the way up here, well, we'll see, and if it does go all the way up, which I haven't discussed what happens if the market goes up, because I'm quite adamant that it won't, even though we're quite close to doing that. So, I mean, you could say the miners are 1 or 2 days away from breaking out again. Well, if it does happen, it's fine. I'll look for the next levels to trim, maybe here, then there, etc. But I just think we need more of a drop in the dollar and yields for that, and I don't see that happening. I also think that there are some other parts of the market that could take down all the markets, whether it be crypto, certain stocks in the Nasdaq in particular, banking stocks and black swans all over the place. Look at the war, don't forget the war's going on. So yeah, let's see. But anyway, GDX and GDXJ were green today, so they actually outperformed the general markets, despite the underlying metals being basically red or unchanged. So pretty strong, pretty annoying for me to see, but I'm not going to fight the tape. I'm just going to be a little neutral and just say, look, it's strong. GDX also nice and strong. And then closing near high of day also for both of them. So let's see. We did completely take out the this consolidation bottom formation here. I mean, we really popped out. So you would expect there to be strength pretty early on, which is what we've seen. I'm just hoping a market flush can take us down again, because that would be a serious buy the dip opportunity. I really think the miners are a massive buy the dip, but I don't want that train to have left the station and to never come back. And there I am with only a couple of bags on board that train rather than all of them. So I don't really want to chase it. But then again, you're not going to chase it. If I do buy breakout, you zoom out, you're not exactly buying the real all-time high breakout, especially if you look at GDXJ. Anyway, that's the miners. Let's see next week. I think today was a bit of a nothing day, a sideways day. We didn't get any crazy news or crazy volatility, bearish or bullish engulfing candle. We just got a bit of sideways action. If it's not at 1%, it doesn't really count. Now let's look at certain stocks. There are certain, not many, but there's about 3 or 4 stocks I want to look at. I'm going to start with Credit Suisse, down 3%, the worst of its peers. Now, this little bank could take down a lot. I don't like this bank. I don't like any of the banks, to be honest. No offense. I'm sure they have a lot of nice people running them, but yeah, fundamentally don't like the fractional reserve lending and all this trash and all the exposure they have to derivatives and all this stuff. And it's funny, people think, oh, interest rates going up is good for banks. Yeah, not really. Not really. Not when you look at the trillions of dollars in derivative exposure they have in junk bonds and all that. So yeah, look at this. I mean, look at this. Credit Suisse, that is not far away from testing its lows. And remember how good the markets are doing. I mean, let's look at the XLF, the ETF for the financial sector. I mean, basically at resistance, right? The market's also pretty high up. If you remember those charts, the SPY, the Dow, the Nasdaq. You could even say the XLF is outperforming the Nasdaq. Obviously the Nasdaq, but the SPY. You could say that. You could take up that chart. We don't need to. You can just remember. So the financial sector is doing okay apparently. But Credit Suisse is doing horrible. And a little bit of a move down in the market, really, a little bit of a move down next week in the market. And this comes back into the story. Like 6%, that's a move that Credit Suisse could do in one bad day. And then what? One more day down. And it would happen because the chart would look horrible by then. You got to anticipate what the chart would look like, what that red candle would look like. It's just begging to lose the ascending support, and we're testing here. Maybe we go sideways, there's a fake flush. But basically, one move lower to me guarantees that we take out these lows. And then you have just a horrible chart. You don't even need to look at this trend line. This trend line is quite good though. That's probably why I drew it. But I mean, look where we are. It makes no difference. This thing would go bankrupt. And if Credit Suisse goes bankrupt, to be honest, you can imagine yourself, you can probably look up a couple of YouTube videos online. I'm sure there are some people who've come up with some good financials and speculation as to what would happen. But, it's going to take down the markets, in my opinion. It could be a bit of a Lehman Brothers moment, maybe worse. You could have, a recession and a financial collapse happening at the same time. We have a recession, we're in a recession, we're in a depression, in my opinion, an inflationary, stagflationary depression, plus a financial crisis, plus a little World War III just around the corner. It's always nice. So Credit Suisse is one to look out for. That was in the news 1 or 2 weeks ago, or whenever it was, when there was this red candle, maybe just before. It flushed this zone, came back to retest it. It's funny that, isn't it? No matter what the news is, the chart always seems to have its own strict patterns it adheres to. Comes back up, flushes. This is probably some bad news. I forgot what it was. Comes back to test another gap fill. Look at that. Gap fill again. And now what? And we're going to flush again. And there'll probably be news coinciding, and people will probably blame the news, but it's just the chart and the news. So that's Credit Suisse, one to look out for. Let's look at my next little culprit. That would be Tesla. Tesla, remember where the markets are all the way up here, hardly coming down. Tesla is at this, I'm not going to call it a head and shoulders. This is the shoulder, this is the head, this is the shoulder. Whatever you want to call this, it's basically at the neckline, right? Absolute support here. Where is, and I remember saying sell up here. I remember that. But anyway, yeah, I've already drawn everything. And you can see it's my old support and resistance circles here. But let's just move this out of the way so we can see. We're basically here, right? We're at 180, 180. 180 is a nice number. We actually tested a lower number than this candle's low down here. So you could say we've reached a lower price than has been the case for months going back, maybe whatever this is, 1.5 years. If we start to see a market drop tomorrow, Monday, same thing. The Nasdaq, which is the weakest of them all, and remember how close that is to ascending support, which is the weakest technical pattern. I think the Tesla moving down, whether it's because of Twitter, people think Elon is now forced to sell Tesla stock to focus and shore up Twitter, whatever the news might be. If Tesla starts to move lower, sending the Nasdaq down and the markets, whatever, probably sending crypto lower too, by the way. We don't really have much support until, okay, it's true, 160-ish, It could be a little temporary pit stop here, but basically until this gap fill and this nice 140, just below 140. You see that over here? And this is also a nice choppy area, so you'd expect a bit of support there. But really, 160 for a little Kit Kat break, and maybe the market's going to rally because it's not going down at one go, and then back down again to 140, and then you've got this fall from grace over 400, and obviously there were splits on the way, but whatever, it's everything's proportional. We moved from 400 all the way down to 140. That's a pretty big move. 60% ish in this cult stock. And I like Musk, don't get me wrong, but I mean cult stock sort of positively, a stock that everyone buys regardless of what the balance sheet might look like, because it's Elon Musk. But that's a big drop. And that's a serious drop because right now we're testing serious support. I mean, this held a long time and going back some time too. So yeah, you got to watch out for that. I think that has the power to take the market down on its own. A lot of big positions in Tesla, so it's a big part of the Nasdaq and I think the S&P, whatever. It doesn't matter, but big part of the market. It's one of the big boys. I don't think it's Fang, but it's if Fang had a TNA, it would be in the. Although Fang's been completely obsolete now. Anyway, look at them; they've all been destroyed. Look at Netflix, right? Wasn't that Fang? I think. Look at that, destroyed. So yeah, Tesla, that's another one. So credits to Tesla. Another one is Amazon. Now, Tesla, just by the way, is not doing that weak. It's sort of made a new high there. So that's why I'm not covering all the big boys. I'm just picking out another two. So Amazon is another one. Obviously, it's a huge stock, huge. It has moved down already, but just watch out because first of all, if we lose this support here, okay, we hit 80, but then we're going lower, and this is a big stock. So just a move from let's say 85-ish down to 70 is a big deal. That's a lot. That's like a lot of hundreds of billions wiped off the markets, probably. If you take into account the other stocks that will move down with it. And the reason I bring it up, it's quite close to its low. I feel like another move down in the Nasdaq, we could be testing this real quickly. So when you've got big boys near their lows, because all these other little, I'm not going to call them little, but all these other stocks like the Zooms and okay, Meta also, but I'm talking about the Zooms, the PayPals, and the Nvidia, AMD, these are big stocks. But when you get the little guys that are down 80, 90%, that's one thing. But when the big boys start to lose their support and come down, that's gonna take the market down a lot. Because these PayPal's going down 80%, they don't have the strength to take down markets the way a 20% drop in Tesla could. So yes, just watch out for Amazon. Also, I think that's another one to look out for. Uh, Obviously, I'm waiting for the day to Apple for Apple to come down here and flush its 130 level. That would really take down the market because that's been very strong. Everyone's been hiding out on Apple, but I don't really see why Apple deserves its current price valuation. Anyway, those are the big stocks. I want to cover crypto. Before I do, I want to cover crypto stocks just to stick to the sort of special stock section. The reason is I feel like they are trying to tell us something. Look at Coinbase, right? Let's make this small. Coinbase is essentially testing its lows. It's about one day away from testing its low of $40. And it's also, I mean, obviously it's already been destroyed. We don't have a historical chart pattern of where support would be, but you can look at other stocks for that actually. Plus, obviously, Bitcoin is the underlying commodity, if you want to call it that, that all sort of direct the trend of all of these. But Coin is testing its lows. Coinbase, MicroStrategy, everyone's waiting for this one to go bankrupt to maybe carve the all-time flush capitulation low in Bitcoin. I think that would actually be the case. Tether or MicroStrategy or both, 1 or 2 days away from testing its lows, just one flush, and then maybe another one just for good measure. Riot. Right. I think it's based in Texas or something. This is one of the best. This is one of the top three in my opinion. Basically at its lows, at its lows. Look at that. Another red day. It's just red day. You can ignore this NV2. It's a German one, but by the way, totally destroyed. Breached its all-time lows when Bitcoin was at 4,000. The reason it went down more than the others is because I think it's embroiled in some lawsuit with Riot or something. But I think actually it's a buy compared to the others. Mara, just like Riot. I should have one near the other. Um, Mara, absolutely near its lows, closed at low of day, horrible stuff. Decent stock though, actually quite a decent stock. But there's talk of, if Bitcoin goes a little bit lower and also with the energy prices, because these guys take a lot of energy, the cost of energy is going up. And if the underlying commodity is going down, you're making less money and the costs are going up. So obviously, share price gets destroyed, plus speculation, short covering, shorts piling on. And the rest is like momentum technicals and all this stuff. So very vicious pressure on this. Also, not far away from testing its lows, Hut 8 basically made new lows, took out its lows from down here. Bitfarm, same thing. So, point is, all of these crypto miners are really looking weak, and that's after already being down. I'm not gonna. Well, I will. Why not? They're all kind of the same. They're all down 90%. And you got to remember, if you're down 80% in the stock, now imagine a stock's down 80% and you go into it and then it goes down 50%. Imagine you finally go into a stock for the first time after it's down 80%. If it goes down 50%, that stock's just gone down in total 90%. It's only 10% extra, but you've lost 50% from your entry when it was down 80%. So, when you see, oh, it's down 83% and the next day it's only down 86%, that's a big move from 83 to 86. So these are huge moves. People who had money in these stocks all the way up here, they're just destroyed. They're just what was 20,000 is now worth 800. It's stuff like this. So you can make big gains, but don't enter with too much aggression. Now, I actually am in Hive. I traded it here, made good money, sold, but didn't sell everything because I actually have a long-term view on crypto. I'm not the biggest crypto bull, but I do think it could go higher. It will go higher eventually. I also traded this down here, so I have a very good history with Hive. Made a lot of money in Hive, and I intend to do the same again. I probably got 10% in the Hive compared to what I really want. And if it keeps going lower, the amount I have will just reduce and reduce, and it'll be probably 5% of what I want. And then I'll just go in 95% here. That's my plan, to just make a lot at the absolute, we'll just go in heavy at the bottom. And so far I'm banking on it going lower. And you can see Hive, like the other ones, made a new low, closed the low, very bearish. Now let's look at the actual Bitcoin. Bitcoin was not as bearish, right? And on the daily chart, it's not exactly making new lows down here. So why do I bring that up? Because yeah, as I feel that the crypto miners are suggesting that Bitcoin will go lower because the markets were green. I mean, these crypto stocks, they follow the markets too. I get that, but the markets were green, right? The markets are green, Bitcoin's green, but these crypto stocks are red. And I feel like just there is some similarity between some parallels between the gold and the Bitcoin world. And I feel like the gold and silver miners, the GDX, GDXJs, the SIL-Js, the Huey, whatever you want to call them, the miners sometimes indicate in advance where the underlying commodity is going. And I think that's the case here too. I feel like, and I've said it, I feel like Bitcoin's going to go lower this weekend, maybe the weekend. It's sometimes they need the market to make their move, but let's be honest, with FTX blow up, didn't need any market moves for that. And maybe this weekend, because there's contagion, there's an infection spreading here with FTX. What is that? BlockFi went bankrupt. Then you got some Genesis stopping withdrawals. When you see what FTX was linked to, that's basically the Lehman of crypto. And there are some delayed aftershocks. So what about Tether? What about MicroStrategy? What about all these other institutions and some that I don't know of? And it's like trending on Twitter, so it doesn't take much. People's confidence is shaken. So even over the weekend, you could just have this flush down and then zoom in on crypto, on Bitcoin. Sorry, I've said it already. I feel like we're going to test this ascending support and then break it. And when we break it, it's done. It's done. Let's say we go to 16,000. In fact, if we get to 16,000, it would have broken it. 16,000. Maybe there's a fake out, comes back up, basically goes back down, 15,800. And how much of a move is that to go from where we are now? 6% can be done in 1 minute. I've seen it done, especially on news. So, and then what happens, not to get too much into the dream world, but once we lose 15,500, and I've drawn all these in, and you know what? I think it's pretty accurate. Once the flush happens, we lose 15,500 all the way over here. We come back down to 14, definitely support, temporary bounce. If it's really bad news, if it's a bankruptcy that's done this, imagine Binance goes bankrupt. Who cares about my 14,000 target? It goes straight down. I mean, this will be a 10,000 mover. So it's strange how sometimes the miners predict this correctly, but something to look out for. So, I mean, all the points I brought up were sort of bearish, whether it's generally the market's going down, the dollar going up, the yields going up, certain stocks that I think are very bearish, very important to the market and could take down the market, and crypto. As you can see, the general trend is stuff to go down. Um, I got to make sure I have a plan if things go up. I don't see it happening, but I do. I mean, I hold stock that will go up if the markets go up. But anyway, that's my take on next week. And let me know what you think, maybe. Otherwise, have a good weekend. And yeah, speak later.